Today we had a test on the trend line for the S&P 500. This was a hard day for short-term traders. If you look at the 15-minute time frame, you got the 15-minute open range break going down, and then all of a sudden it hits the trend line and reverses and takes out the high. For short-term traders, that's just something that's really hard to do because your shorts are triggering down here, and then all of a sudden you just get that reversal and you get stopped out. On the other side too is that if you take a long off the open like I did, you got sucked into this, and your stop ended up hitting. So it was a tough day. It was best to avoid. I'm just thankful that I use a small position size, and I was able to back test something that I found that I ended up liking for my stops. So it's something that I'm gonna look at to going forward, and hopefully it's a little improvement. Nasdaq, same story. Still holding this uptrend. I actually didn't even touch it today. The thing though that I'm seeing here is that you basically have a doji on both sides of Friday's candle, and that's just something to pay attention to, that there's extreme indecision about this market on where it wants to go, and you can just kind of ride the wave after it. I mean, I talked a few days ago on 717. Let's go back to the S&P 500 here, of how you had these double inside candles that break above, and then it just kind of stalled out there, and then now we're just having all of these basically indecision candles on the major indices, and it's something that is something to pay attention to in terms of the overall trend of the market. Russell, once again, the clear dog in the market. If we pull up this, you can see that the Russell was down 0.5% versus the S&P and the Nasdaq were both breaking even. I mean, that's an extremely bearish sign for it. It retested this low from here, from 717. So it goes, now we got basically I wouldn't say you could say a cup and handle almost for this, but it's not necessarily clear. I would wait for a couple days of consolidation before taking the short. But that would be mainly as a hedge against longs. I mean, I'm not really looking to do anything in this market for a little bit. The one trade today was Apple. I mean, I got chopped around on this. I hate doing these video reviews and saying how I get chopped around, and but the truth of the matter is that that's what happened, and I'm not gonna lie to you guys and say, okay, yeah, I had a great day. That's because that's not me. I'm not making these videos to make you guys think I'm a good trader. I'm doing these videos so that I learn and I become more accountable for my own trading. So I mean, I took Apple off the 5-minute open range break here, and it started off, and then the futures just pulled it in. If we pull up the chart for 840 to 845 on the S&Ps, oops. I mean, it just got sucked in. So you got 840 to 845. I mean, there was no hope. What's that price range there? It dropped 61 cents in a matter of a couple minutes, and that just stopped me out. I ended up looking back on it because, okay, even though that I did take this, my stop was the low of the day. I was looking at it, I was like, I still wanted to be in this trade. Because there's a couple ways that I could have put my stop. I could have put my stop down here, but that would have been too much risk for my target. So I ended up thinking about it. Oh, okay, if I'm trading a higher time frame, I got to take a higher time frame stop, because this is, I'm not necessarily trying to day trade this. I'm trying to more or less short term swing it. So what I'm going to do now is I'm taking the average true range of Apple, which is of the daily. So that's $1.57. It comes out to be like 60 cents for the stop, because I'm taking the 0.382 fib. So that would put me at, we have the trigger, 60 cents below that. So, I'm still in this trade. I'm going to give myself a little leeway on this. Okay, it's 97.54. I'd probably put it a little below that. But I'm just I've gone through all my previous trades, and that's something that that's a little modification that I'm going to be doing, so that I'm making sure that I'm lining up my stop with my my overall trade goal. So I'm not being too tight with it. Going into tomorrow, I've got a few that I'm watching. I'm honest with you guys, I'm going to sit out tomorrow and just make sure I can recoup here. Because I've taken some small paper cuts lately. I'm down for the month now. I'm down like a 0.5% or so, but I just need to regain focus here and not let my losses become anything bigger. So Priceline is one that I'm watching. Let's let it load here. So Priceline, I'm looking at that for a trigger. You could become a little more aggressive with it if you look at the 2-hour time frame. You realistically could use today's high as a trigger to go long, and you see that there's not a lot of volume up here. I don't have volume profile on this, but that would be something to look at, and it would show you that basically to go long up above the 1242 mark. IBM is another one too that I'm looking at for a long. Like I said, you see the 2-hour, you see the test of it here, and then basically how at the end of the day it didn't dip below or try to retest this previous area of resistance. So that's bullish for IBM. It's hard for me to get a trigger on this because it went high. I'd probably just use today's high as the trigger long with some sort of open range break that's a little less risky, probably like a 30-minute open range break. And then you've got targets of I would probably say 200 for targets. So let's try to do this. Let's just go through a hypothetical trade here. We got IBM. Average true range is 2.5. So you're looking at, I can't do this off the top of my head, probably about, let's just say a $1 stop for now. So we take it, we would do a little bit worse, a little bit. So there's our, let's say that's our trigger. Our stop would then be $1 below that. Oops, long position. Stop would be about $1 below that. And then our overall target would be a little under 200. So then we got about 3 to 1, which is exactly what I want for my overall risk reward profile. So that'll be a really good trade for me to take. So I'm gonna be watching that. I'm gonna paper trade it and see what happens. Facebook is one that's setting up here. It's consolidating on the daily. We've got this ER, an extreme gap up. That's great. It's on a pullback for the market. It's not even thinking about retesting those lows or the previous all-time highs, and we kind of got a wedge down going here with the area of support. So I mean, it's something that it might take a day or two to go ahead and trigger, but Facebook is definitely one that I'm looking at to go long. First of all, I'm not a fan of really shorting anything in this market, but Pandora's got a good shot here to collapse below this level. Like I said, this is the 710 low from a while ago, which was that extreme gap down, and then the market shot up. I'd be looking to go short below here. It's got the test of that, the ER, and then it could easily go down to 23 a share. Under Armour is one that I'm looking at for long. This is out. I'm probably gonna end up moving this to my list of stocks that I routinely trade. It's got good spreads to it, and I could also go in commons too. So you look at this, it's got a lot of the volume profile for this would be pretty good. Above the 70 area, it wouldn't be bad for an open range trigger. It's got. Oh shoot, I'm zooming in too far here. I mean, it's just it's just a very bullish pattern with having this huge run up after ER, and each day is closing green, and it's just something that, or it has a green candle, and it's just something that just looks very, very bullish, and it could just could have a blow off here. So that's something that I'm watching as well. Nike is another one. Like I said, this is outside of my normal list of stocks, but you're talking about an ER here, and then just kind of consolidated and now coming back up. If you look at a shorter time frame, you could argue that this would be like a head and shoulders or something, where you got one shoulder, the head, and then you got the other shoulder that's forming right now. So I'd be looking to go long this above the 78.83 area, and have overall targets of the 89 or the 80 area. So I mean, it wouldn't be a bad trade. Let's just do this stock thing again. So Nike, the average shoe range of 1.1, so it's about a 70-cent stop, or excuse me, like a 50-cent stop on this thing. So you take this long off that 78.83 trigger. You put a 50-cent stop under it, and that's long position. You're at about 2.24 or 2.21. And that's not something I'd really like to take a trade on. So, but it's just something to keep in mind. So, anyways, that's basically what I got for tomorrow. Hopefully I can pull myself out here of this little slump that I'm in. I mean, it is what it is, and I just gotta learn from it, and hopefully that once some momentum returns to the market, that I can capitalize on it. So, anyways, thanks for listening again, and like the video.